Hello dear traders. Governments are good at cutting off the heads of centrally controlled networks, Satoshi Nakamoto wrote in 2008. He gave blockchain technology and Bitcoin to the world. However, good ideas do not always come to life as planned, and this is what happened to cryptocurrencies to some extent. At first, cryptocurrencies were intended to be decentralized and free from government interference. With time, however, they got to crypto exchanges and got really centralized. Giants like Binance, Coinbase and FTX came along, yet they could not withstand government interference, especially when problems had been brewing for several years. Thus, the FTX crypto exchange collapsed when US regulators stepped in. A close investigation revealed that its management had been involved in fraud and had committed other violations. A legal battle between Ripple and the US Securities and Exchange Commission has been ongoing for over 2 years now. On March 27th, another US regulator, the Commodity Futures Trading Commission, sued Binance. The Commission alleges that the world's largest crypto exchange has been engaged in lawful financial activities, offering trades for cryptocurrencies including Bitcoin, Ether, and Litecoin, which are commodities. With Ripple battling for the right to consider its coin an asset and not a commodity, the CFTC vs Binance case will be yet another cause for investors' concern. If Ripple wins the case, that will be a major breakthrough, and it seems that investors crave such an outcome. The amount of hype surrounding the sixth largest cryptocurrency began to grow after the latest decision of the US Supreme Court. It concerned Binance's US-based subsidiary and its intention to acquire the assets of the collapsed Voyager Digital. The Supreme Court rejected the SEC's claims to label Voyager's VGX token a security and Binance US an unregistered securities exchange. This ruling could serve as a precedent for similar lawsuits in the future. XRP jumped by 27% as Ripple published a notice that cited the Supreme Court's verdict. The token rose to $0.45 for the first time since November 2022. On March 29, the price hit a weekly high of $0.58, so it seems that there is euphoria around XRP. However, a forex sentiment could trigger more sell-offs once the token is sold at its peak value. The XRP price tested $0.50 and traded at $0.55 on March 29. The next resistance level is seen at $0.60, where holders may begin to take profit. Bitcoin entered a correction yesterday and traded in a narrow range between $28,055 and $28,625. Although the banking crisis sparked a rally in the flagship cryptocurrency, investors have encountered a new obstacle, namely the lack of liquidity and increased slippage. In other words, the gap between the expected price and the execution price has widened. For instance, slippage for buying Bitcoin with US dollars on the Coinbase exchange is 2.5 times higher than it was at the start of the month. Meanwhile, liquidity has been declining since the collisions of Sam Bankman-Fried FTX and the Alameda Research hedge fund. In fact, Alameda was one of the largest liquidity providers in the crypto industry. The situation is now even worse due to the meltdown of Silvergate Capital and Signature Bank. Their networks have long been used for increasing liquidity by quickly buying and selling tokens and transactions on exchanges. In addition, Binance, the most liquid crypto exchange in the world, stopped zero-fee trading on a selection of Bitcoin trading pairs last week. In fact, Bitcoin's recent rally, which was triggered by a splash in volatility and a weaker dollar, seems to be getting weaker. Anyway, despite all the recent woes, the premier cryptocurrency has reached a 9-month high. Moving from 28,656, the coin tested the lower limit of the range of 26,750 twice in the past 7 days. The price then recovered to 28,500. If the bull run goes on, the coin will test important resistance at 28,721 and 29,000. Support for the instrument is seen at 26,433 and $26,000. The Commodity Futures Trading Commission's lawsuit against Binance stirred panic in the crypto market. Once the news became publicly known, Ethereum users withdrew tokens worth $400,000. As we can see, even the slightest probability of something going wrong in the crypto market makes holders worry. On Monday, Ethereum American dollar pair tumbled below 1,700. In the past 7 days, Ether lost just 0.5%. On March 29th, it already recovered to 1,800. Meanwhile, Litecoin dropped to $85.7 on Tuesday from the high of $95.9 recorded on March 24th, but then grew to the range of $92 on the following day. Over the past 4 weeks, Litecoin has added more than 5%. The currency is gaining popularity thanks to low transaction costs and fast execution. Silicon Valley Bank's failure highlights digital assets' far-reaching possibilities. The bank was brought down with smartphones and group chats in just a few hours. In times of economic and political upheaval, the opportunities for digital mobility cannot be overestimated. The legal action against Binance comes just a few weeks into the crisis at America's crypto-friendly lenders. Regulators increasingly strive to control the sector worth around $1 trillion. Maybe it is time for cryptocurrencies to get decentralized again. Of course, decentralized exchanges like DYDX or Uniswap are far less user-friendly than Binance. Historically, centralized exchanges have had more liquidity and larger trading volumes. Binance has a daily trading volume of about $9.3 billion. In comparison, DYDX trades crypto worth about $770 million daily. However, on decentralized exchanges, traders can buy and sell cryptocurrencies without an intermediary, and every move can be tracked on the public blockchain. That is, such platforms do not even need an audit. Centralized crypto exchanges are very far from having the same level of transparency. Too many users of custodial wallets have lost their assets, including through negligent company management. While operators manage users' addresses and have access to their private keys and personal data, they can take advantage of all that. Meanwhile, then, not your keys, not your crypto saying can become an empty phrase. Back in 2020, when governments initiated money printing, one of the world's most successful traders, American billionaire Paul Tudor Jones, wrote a compelling letter to investors. At the end of the day, the best profit-maximizing strategy is to own the fastest horse. Just own the best performer and not get wed to an intellectual side that might leave you weeping in the performance dust because you thought you were smarter than the market. If I am forced to forecast, my bet is it will be Bitcoin. Maybe Bitcoin's time has come, so make sure you bet on the fastest horse. See you in our next video.